advanced valuations, the tutorial exercise, questions 2 and 3. Question 1 is a theory question. You can just look at the memo for that. Let's get started. So it's currently 3:03 p.m. I have not actually started studying week 6 or week 7, but as soon as I do and I figure it out, I will upload videos on that. One piece of feedback that I got on the previous video was that for those using their phones, they couldn't see the left-hand side of the screen so clearly. So what I would recommend is just use your laptop. I've tried to zoom in a little bit more here, but yeah, ideally use your laptop for this. And if that doesn't work, just open up the PDF from Amatuba, so you'll be able to follow what's going on. Okay, what is the second question, or question 2? They ask us, calculate the company's continuing value that will be added to its present value in year 0 based on the free cash flows shown below. They give us the discount rate, 12%. They also give us a growth rate of 3% from year 5 onwards. So when doing this question, we don't really care about anything except for the value we have in year 4. So year 4 is a value of 56.8 million. And so how do we get the value that we have in year 5? So we take that 56.8, we grow it by 3%, so we multiply by 1.03, that gives us 58.504. And then here we're going to use the Gordon growth model. So P of 0 equals D1 over I minus G. So D1 is our 58.504, so that's, we see it as a dividend in the next year. And then I is 12%, that's what they told us, that's a discount rate. And then G is a growth rate, 3%. So we do that calculation, we get a value of 650,044,444. Then we have to discount it to year 0. So please note, this value, this tells us that, in year 5, we have a value of 58.504. But that is in perpetuity, gives us the continuing value of 650,044,444. So we don't treat it as being at the end of year 5, we treat it as being at the end of year 4. So when we discount it back to year 0, we say 650,044,444 over 1.12 to the power 4. So over 1 plus the discount rate to the power 4. That should give you a final value of 413,114,967.0 to 1 decimal place. That is your final answer, and that is also the answer they have in the memo. Let's go to question 3. So question 3, Bugs Boutique Pty Ltd has 30 April as its financial year end. Provocative Fashions Limited is a company listed on the JSE and is interested in acquiring a 60% interest in Bugs Boutique. The latest financial statements are for the year ended 30 April 2017. So 2017 is our year that we care about. The following information relating to Bugs Boutique is provided. Okay, let's go to the question. The question says, calculate the value of a 60% ordinary shareholdings in Bugs Boutique as at 30 April 2017 using the free cash flow to the firm valuation model. All workings must be shown. So this tells us two things. One, because they ask for the value as at 30 April 2017, we're definitely going to have to do quite a bit of discounting. And they tell us to use the free cash flow to the firm valuation model. So we should be somewhat comfortable with that by now. So as I said in the previous video, the first thing to do is calculate the net working capital. Now, this question is a little bit different. So they don't just give you the components that you usually use to calculate net working capital and you just plug those in. What they tell you is that if you go to point 3 and point 1. Point 3. On 30 April 2017, the total investment in net working capital of Bugs Boutique was equal to 20% of sales revenue. It is expected that at the end of each subsequent year, the total investment in net working capital will be equal to 20% of sales revenue. That tells us that if you want to know what investment in working capital is going to be, we need to know what the sales revenue is. So point 1, the sales revenue for the year ended 30 April 2017 amounted to 1,000 million. Sales revenue is expected to grow by 30% during the 2018 financial year and by 25% in 2019. Okay, so 2017 sales is 1,000 million, we know that. We have to grow it by 30% because that's what they tell us. It's expected to grow by 30% during the 2018 financial year. So our sales in 2018 is 1,300 million. And then take that 1,300 million and grow it by 25%. So multiply by 1.25, you get 1,625 million. So now how do we work out the net working capital? Just multiply by 0.2, 20%. So for 2017, it's 200 million. For 2018, it's 260 million. For 2019, it's 325 million. Maybe my handwriting is a bit unclear with that one, but yeah, it's 325 million. So what that tells us is that in 2018, we already had 200 million on hand in net working capital. We added 60. So our investment in net working capital for 2018 is plus 60, and our investment in net working capital in 2019 is plus 65, because we had 260 million on hand. We added 65 to get to 325 million. So first part done, we've got our net working capital calculations. Let's start with free cash flow to the firm calculations for each year. So for 2018, so in the previous video, I showed you guys what the formula is, but you can just kind of write it down as I do this. So we want our gross profit. So quickly have a look at point 2. It says here, the management of Bugs Boutique uses a technique called percentage of sales when performing projections. During the financial year ended 30 April 2017, Bugs Boutique achieved an operating profit margin of 40%. It is expected that the company will maintain this operating profit margin into the future. So that tells us when we want to know what our gross profit is, we just take our sales revenue for that year and we multiply it by 40%. So our gross profit in 2018 is 1,300 times 0.4. Then we subtract tax, so we multiply by 1 minus 0.28. They tell us that the tax rate is 28%. Sorry, where do they tell us that? Over here, 0.9. The applicable income tax rate for companies is 28%. Okay, cool. Then we add depreciation. So we go to 0.5, 2018, here's depreciation. Cool. And so then what we do is we subtract 100 million, so that's net capital expenditure. That is this value over here, 100. And then they say subtract, and then we subtract the investment in net working capital, which we already calculated from the previous question. Our investment in net working capital for 2018 is 60. So once we've done that, we get a value of 294.4 rounded to 1 decimal place. So that gives us our free cash flow to the firm for 2018, not yet discounted. Now let's discount it. So we say 294.4 over 1.14 equals 258.2. Why do I use 1.14? Well, when we discount in the free cash flow to the firm model, we generally use the WACC when we discount, the working average cost of capital, 0.6, that is given to us as 14%. So 1 plus 0.14 to the power 1. It's to the power 1 because it's just 1 year after 2017. So we just have to say to the power 1. So we discount it to get 258.2. Let's move on to 2019. Okay, this is the terminal year. So we know that we're going to be working with continuing values. So let's start. So again, to get the gross profit, we say 40% times the sales revenue. That gives us our gross profit. Then we subtract tax. The way I do it is saying 1 minus, multiplying by 1 minus the tax rate, which is 28%. We add depreciation over here. 2019, the depreciation is 90 million. Then we subtract net capital expenditure. 2019, that is 120 over here. Then we subtract investment in net working capital. That's what we already calculated earlier with our net working capital calculations. And that should then give you a final value of 373. What do we do now? Now we need to calculate the continuing value. So firstly, we take the future cash flows to the firm that is not yet discounted for 2019. So we multiply it by 1.06 over 0.14 minus 0.06. 1.06 because that is the growth model, and then we divide by the WACC minus the growth model. So that should give you a value of 4,942.3 to 1 decimal place. So that is the continuing value. So we add those two together, the 4,942.3 plus 373, that gives you 5,315.3 million, of course. Now we have that, let's discount it to present value. So 2019 is 2 years after 2017, so we discount it. So just a note here, you could make a mistake with the calculations if you just say 5,315.3 divided by 1.14 squared, because in the calculations that they have in the memo, they have rounded off the discount factor. So you say 1 over 1.14 squared, that is equal to 4 decimal places, 0.7695, and then you multiply that by 5,315.3 to get 4,090.1. So just take note of that. Then we can move on to the simpler calculations, the enterprise value. So for 2018, we have a free cash flow to the firm that has been discounted of 258.2. For 2019, it is 4,090.1. So we have 4,348.3 million. We add our non-operating assets. So if we go to point 8, the non-operating assets of Bugs Boutique had a carrying amount of 80 million and a fair value of 100 million. So I hope you guys will agree with me that we use the 100 million because that is the fair value. So we add that 100, then we subtract 380. Where do I get the 380? Well, on 30 April 2017, the debentures of Bugs Boutique had a market value of 380. So we know debentures are, debt instruments. So we use that for our borrowings. And so what do we finally get? We have an equity value of 4,068.3 million. Now we want to know what is the value of 60% ordinary shareholdings. We say 60% times 4,068.3, and that should give you a final answer of 2,441.0 million. So that is the value of 60% ordinary shareholdings. At the end of this, what I'll say is just notice that you have to read the questions carefully. Do highlight the important bits of information, because like with the previous one that we did, there's a large amount of information that is just there to confuse you that is not actually necessary, so don't get overwhelmed by it. And then in terms of this video itself, please let me know if the quality is okay, if you can see the PDF on the left decently. Let me know if the audio quality is good. I apologize if there's some noise in the background, cars and stuff, but it shouldn't be too bad. And then what I'll finally mention with all of this stuff is just please make sure that you know your formula for these things. As long as you know the formula, you don't need to know hectic theory. You just can find the stuff and plug it. And yeah, just read the questions carefully. The next videos I'll be uploading will be on week 6, so just bear with me, let me get to that. And yeah, good luck for the test, everyone.